given that the market rally has broadened out overall and people are less fixated on the Magnificent Seven now than they were maybe, say, a year ago?
Less fixated, but the demand is still there. If you see ETF flows when it comes to tech ETFs, it's almost at 30 billion. So that's even 4 times last year. So you see the appetite really grow and grow. And the ChatGPT frenzy started in 2022, so it's still growing, and it comes at an interesting time because we're going to see a big earnings bonanza this week. So if you really want to double down on your bets, you have that. But the interesting for me is Defiance. It has X Magnificent 7, so just the 493. It's almost funny. The way I look at this is issuers are trying different ways to splice and dice the market. It's like if you want this slice, you get something. If you want that slice, you also get something.
I thought that was interesting, too, because, I mean, there's plenty of ways to try to escape the influence of big tech. You could buy the equal weight index, for example. This obviously is a new way to do it. And also BlackRock hedging their bets a little bit.
Exactly. And the interesting thing is it all came together. It's the trio of funds. So it's like they're accepting that everyone is different. It's kind of polarized. It's either you talk to portfolio managers who are all in and some are like, no, it's getting too frothy. Valuations are too stretched. So BlackRock is like, here you go. Pick top 20 in the S&P, top 30 in the NASDAQ. Or if you want, here's top 31 to 100 in the NASDAQ. So it's actually really an exciting time. There's really an ETF for everything. But it remains to be seen. I think this is a really big week. We have Alphabet tomorrow and all the other big tech names coming out.
I almost didn't recognize the tickers because none of them had I in front of them, Katie.
That's true.
Like, are they going off brand now here?
You know, they have I in the name, but it does feel like BlackRock is backing away from the iShares tag a little bit here.
And it's just maybe the ticker shortage. Katie wrote a fun story on it, and the permutations are just not limitless anymore. So it's really a ticker game.
Yeah.
So when you talk about valuations, though, I mean, that's a big concern here. It's just interesting that instead of saying, here, we have an option for you that looks at some of the cheaper options, it's like, oh, no, let's just lean into the fact that it's expensive and it could get more expensive.
Yes, if you want to pile all in, there is that. But I want to bring out a Bloomberg Intelligence average estimate for earnings. It's 19% for this quarter, which is the slowest pace since the start of last year. So the rally is fizzling out. You can't go up forever. But then again, demand is still there. But we have Goldman Sachs saying the rally will indeed broaden out. So maybe people are scaling back, and Fed will lower rates. So
there's still some juice there.
There is that.